There's trouble on the farm, and it is affecting Deere. The company lowered its earnings and revenue targets for the year, citing both the trade war and the lousy weather in the Midwest. The tractor maker's disappointing results sent the stock down more than 7.5%. Morgan Brennan has more on Deere's 1-2 punch.
Deere cutting its full-year outlook as bad weather and a trade war with China threaten to further hit farm incomes, and with them, demand for Deere equipment. The maker of green tractors and harvesting combines now expects equipment sales to rise just 5% for the year, down from a previous forecast of 7%. In a statement, CEO and Chairman Samuel Allen saying, quote, ongoing concerns about export market access, near-term demand for commodities such as soybeans, and a delayed planting season in much of North America are causing farmers to become much more cautious about making major purchases. Nearly 60% of Deere's sales come from North America, and for farmers here, it's been really a 1-2 punch. Escalating trade tensions with China, a crucial export market for U.S. agriculture, have sent soybean futures to a 10-year low. And cold, wet weather in the Midwest, including historic flooding in some places, has delayed farmers' abilities to plant crops. That's weighed on demand for Deere, the reason J.P. Morgan downgraded the stock to underweight ahead of today's results.
They have to now actually underproduce retail in the back half of the year because their dealers have too much inventory. And they have no visibility into 2020. So we don't know if we're going to have to continue to underproduce into next year or whether things will be right-sized by the time we get to the end of this year because there's so much uncertainty out there.
Deere telling investors today it is not currently betting on a trade resolution. The reason it's now planning to cut production of farm equipment by 20% at 2 of its North American factories. A fifth straight miss on earnings and dampened outlook sent shares of Deere lower, adding to losses that have only accelerated in recent months. For Nightly Business Report, I'm Morgan Brennan at the New York Stock Exchange.